Welcome to the Productivity Podcast. Diane Whirl, founder at Rendell Intelligence and Insight, is back for our monthly chat around footfall and shopping trends. Hi, Di.
Hi, Simon.
How you doing?
I'm good, thanks. How about you?
Good. Yeah, good. If I sound slightly drunk, I'm not. I've had a fill in this morning and I'm still a bit numb. So
Okay.
we'll persevere. But hopefully, I'm not slurring my
I can't
words.
hear anything. You sound fine to me.
Good. That's fine. And my tooth feels better anyway. So all good. So we're in August to September. We're kind of turn that corner into the leaves falling off the trees, the nights drawing in. I would say the weather getting worse, but it's not exactly anything previously this year to base it on that's been good. So we had an okay conversation last time, I think, didn't we? From July to August, it looked all right. It was looking relatively positive heading in. Lots of rumblings, clearly. Budget's on its way as we record, I think, in a couple of weeks' time. Weather's not been great. We touch on mortgages and stuff in previous episodes and that next tranche of people. So what are you seeing since we talked last into that August to September?
Right. Well, as of time of recording, the inflation and sales from ONS haven't yet come out, but we've got footfall into stores and we have domestic spend in high streets. So footfall into stores first looked remarkably robust overall. Sensormatic and the BRC reported an increase of 3.3% annually in September, which seems brilliant. But when you look under the covers a little bit, the vast majority of that was driven through retail parks and shopping centres that saw big uplifts, particularly retail parks, over 7% increase in retail parks. High streets, conversely, saw an increase of just 0.9% in footfall going into stores in high streets. So very modest increase. And that, really dovetails with the consumer confidence results that came out from GfK in September, which dipped pretty significantly from minus 13. So they have an index score and their index score is minus 13 in August to minus 20 in September. So people clearly feeling less confident. And looking at the data actually and sort of unwrapping that a bit, it's very clear that what people are feeling is a lack of confidence around what's happening over the forthcoming 12 months. So they're talking about, their confidence around the economic situation over the next year is what's really been sort of shaken a little bit. There have been a little wobble in people's how they view their own personal finances, but it's mainly around what they feel is going to happen over the next year. And, there's been a lot of, stuff around the government talking the economy down. And I think that's really permeated through to consumer confidence. And then also into spending, because Beauclair have their results, which is spending in UK high streets dipped by 6.5% annually in September versus a dip of 3.1% in August, with a big hit on food and drink. So hospitality took a big hit in September. And that will be for a variety of reasons, partly because of consumer confidence. And, if you don't need to go out to eat or drink when you're feeling a bit vulnerable financially, you don't have to. But also the weather, we had a week of torrential rain during September that really would have put a lot of people off going out to eat and drink if you don't have to go. I know it did me. But there were drops across the board, really, in high street spend. So it was pretty disappointing month, really.
So this could be, I suppose, a reflection of the general election to some degree, if you follow the pattern, the euphoria, I suppose, in brackets, of changing colours of parties, and then the realism that actually not much changed and the challenges still remain the same. And like you say, maybe there's a degree of talking down the economy for what's to come at the next budget and probably the one after that.
Yeah, absolutely. I mean, I'm sure, a lot of people do it, whether you're starting a new job and you tell your new employer that actually things are a lot worse than you thought they were when you come in, so it makes your job a little bit easier. The government maybe adopted the same approach, it's much worse than we thought it was, this is awful. And I know I was listening to a variety of news programs, all of which were talking about the impact of talking the economy down. So clearly that was a factor. And, if you listen to enough of those, it's going to impact how you feel about spending. I mean, house prices are continuing to increase, which is always a strong sign of people's confidence in their finances. Because actually, people move for new jobs. They move because they feel a little bit wealthy. They move because they feel confident they're not going to get made redundant. So that's still improving, which is a good sign. But, people are putting, their long-term financial assets and future first, really. And that's reflected in the fact that the savings ratio, is 11%, whereas that's more than double where it was back a few years ago. People are clearly trying to recover where they, their position from the last couple of years, because they've had, inflation's been high, mortgages have increased enormously for a lot of people, so they're saving a lot more. So if you save a lot more, you just simply can't spend it.
Yeah, and there's those other economic factors, isn't there? There's a mass exodus of people moving out of being landlords because of some of the tax implications, and we said before in the previous podcast, I think is it November, the next tranche of people come off their fixed rate deals?
Yeah, and then next spring as well. So there's, it's happening in stages.
But on a positive note, we've got Halloween at the end of October. So from events point of view, we kind of hit this run now, don't we? We've got Halloween, which I have to say most of the retail shops I've been in seems less of a thing this year. They've all got the sweets or the costumes, but much, much less into it. Christmas early, we've got all the price establishments of your heroes and your celebrations boxes and stuff that will be reduced down later. So we move from end of October, clocks go back, isn't it?
Back. Yep.
Halloween, then into November, where we start to line up Black Friday, I'll call it week or month now, and Cyber Monday. Then pretty much straight from there, we're into Christmas, and who knows when sales will land. If it's true to form, it's kind of Black Friday starts the sale, doesn't it? In some degree, certainly in fashion world, if there's high stock ratios.
Yeah, absolutely. I mean, for all the data is showing that it's Black Friday that kicks off Christmas trading, and data from Beauclair shows it very clearly. When you look at week-on-week change in spend in the high street, nothing much happens before Black Friday. There is a little bit of an uplift in the end of October with school half term, but following that, it all then depletes again until you get to Black Friday, and then you get this big surge in Black Friday week, and then following Black Friday, you get a constant week-on-week increase in spend all the way through to Christmas. And this year, of course, we've got a couple of extra trading days, and they're the peak trading days. So we've got Christmas Day is Wednesday this year versus Monday last year. So we've got Super Saturday, and then followed by Manic Monday. So the Monday is the 23rd, and that's typically the busiest trading day, busier than Christmas Eve. And so we might well see, some benefit to retailers to having a full trading week plus an additional day. So at least an additional day if people travel Christmas Eve. So that bodes well, really. So and also in terms of where I'm forecasting we sit versus last year. Last year was a bit of a washout around Christmas. The year up to the fourth quarter last year was actually reasonably good. We were still coming out of COVID. We were seeing year-on-year increases in spend. And then quarter four, it all seemed to come together in this perfect storm of, financial challenge, and people just railed everything back, and it was a really poor quarter, and spend was down year on year in each of the 3 months. So just on the basis of that, I'm anticipating a small increase in spend this year in each of the 3 months in quarter four. So fingers crossed that still comes to pass.
Yeah, well, lots to play for as ever. It's a buyer's market, isn't it? So the challenge is to the hospitality companies, the retailers, the online organisations to make the offers attractive enough to tempt that valuable pound that we've saved or we're holding on to. Weather will play a big part. Again, I'm sure it's typically been wet, hasn't it, and dark, which isn't maybe the best for high streets, better for those regional shopping centres and retail parks, which has come through in your figures. Snow seems to be, and that really hard frost, almost a thing of the past, whether that's just the last couple of years and we'll see something different this year. But I think all to play for. I've seen some great shops when I've been out lately, some great supermarkets set up, getting ready to set up, fashion, general stores. So, you can feel that kind of energy and buzz starting to come. Let's get Halloween out of the way, and all to play for. It's going to be tough, but I suppose when's it not?
Absolutely. I mean, Christmas is always a challenging trading period, and I've just worked with AL Marketing on their sort of Golden Quarter shopper survey, and interestingly, 81% of consumers are saying they're going to spend the same or more than they did last year, which is actually about 11% more than the people who said that the previous year. So, shoppers it's not all shoppers that are feeling the pinch. There are shoppers that are anticipating spending more, which is great.
Yeah, it's interesting that I don't think about I have an eye on what I'm buying, but I wouldn't necessarily be able to tell you what I spent last year and what I'm going to spend this year. It's more about finding the right present, if that makes sense.
Yeah, I mean, a lot of people look at it. So, how much can I manage to spend this year? And they will probably remember what they bought people last year and thought, oh, I can't stretch to that this year. I'll do a bit more imaginative or buy something else. So, I think people have an idea of what their budgets are likely to be at this point, whether or not they've actually spent them yet. Some people have, obviously, but unlike me, I do my Christmas shopping pretty late in the year.
Yeah. I look for the deals, so I'm
Christmas Eve.
loath to, well, not quite that late. I fell foul of that when I worked at Boots, and you see everybody, the guys that have been in the pub who then come in and buy a bottle of perfume just as you're about to shut the doors when we had to work out in stores, which is always entertaining. But yeah, not quite that, but I'm like everybody else, you canny, aren't you? You want a deal, you kind of know that full price probably isn't a thing. But that's, I suppose, the challenge then back to those people selling of find me something that's unique, that's personalised, or that's different to part my money with, rather than just the run of the mill stuff.
Yeah, interestingly, the AL marketing surveys come up with some really quite interesting findings, and they looked at what the Gen Z priorities are, and actually, a lot of those guys want traditional experiences, and they prefer shopping for gifts in store. Nearly around 94% of them said they actually want to go in store, which is great news for stores. Fantastic. But quite a few, 2/3 are going to say they want to spend on gift experiences. And this is the whole thing around experience and self-care, isn't it? So things are shifting around what people are looking to buy.
Yeah. And that generation, like you say, it's less about the more environmentally conscious, and if you're buying something that's physical, is it going to be used or sit there or thrown away, recycle, whatever. And I think probably that whole COVID period has taught us that experiential stuff lives long in the memory, doesn't it, rather than physical stuff. So that's clearly a market we'll keep an eye on.
Yeah, and also a lot of, younger people now are renting, not buying, of course, because they can't afford to, and they don't want too much stuff because it means they have to carry it from place to place. So, and they haven't got the room for it if they're flat sharing or renting, so that all goes into experiences, doesn't it?
Absolutely. Brilliant. We'll pause there. Next month we'll cover off, hopefully, if we've got the figures where we got to in Halloween, and then we can, got a couple of exciting months coming up then with all the activity.
Yeah, super.
Brilliant. Thanks, Di. Speak to you soon.
Thanks, Simon. Take care.